What's up, everyone? My name's Chris Marshall with my boy Frank G. We are the hosts of Build Your Empire podcast. Frank G, tell the people what we do.
What's going on, everybody? Chris and I, we discuss established empires while showcasing us building ours.
A crazy, treacherous day here in New York City. We have almost 2 feet of snow. Shoveling is a pain. But, of course, it is February 1st. It is the first Monday of the month, a Money Monday here. And we do have Ankit. Ankit, we love having you on the show, my man.
Thank you very much, Chris. Appreciate you guys having me back on, Frank.
Welcome back.
Happy to be here.
Have you back on. We try to have you on the first Monday of every month. Now, Ankit, Frank, we had a couple of shows ago saying invest, don't gamble. I actually gambled today, bought 3 shares of GME, Gamestop. I'm currently down about $200 in a matter of 10 minutes. I wanted to, that's what happens sometimes when you get a little high and you make brash decisions.
Yeah, certainly. It was a brash decision coming from you. I did not expect you to get into that. The GameStop.
Yeah, well, I'll tell you why. Mushy guy told me to do it, and well, he's a god, so you got to listen to him. And Ankit, why don't you give a little breakdown of what is going on currently, and then we can kind of pick your brain.
Yeah, sure. So this was a really interesting past week in the stock market. I know I personally have never seen anything. You see these short squeezes sometimes, but I've never seen anything to this extent or something that's gotten this much
majority of people, I read a ridiculous stat, 56% of Robinhood users own GME. Now, we know that most of Robinhood users are millennials, even Gen Zs, due to the easy interface and platform. So we know most of the people are in that age bracket. What does a short squeeze mean? Because half these people don't even know what that means.
Yeah. The short squeeze, I would assume that a lot of people don't actually know what a short squeeze is. And first off, what being short means, it's when you're actually betting, in a way, it's a way to bet against a company. So if you think the value of a company is going to go down, you can do what's called shorting it. And you can essentially short a stock to place the other side of the bet instead of buying it and going long. So, as a way or as an example of how that might work, let's say you owned, Chris owned 10 shares of, let's just say Apple. Say Apple was trading at $100, you own 10 shares of it. I think Apple stock, if I was to think that Apple stock was going to go down, I could do what's called shorting it, which would essentially mean I am borrowing those 10 shares from you, selling them right on the spot. So if Apple was worth $100, it would be $1,000 in my pocket today. And I owe you 10 shares. And so what would happen is if Apple stock went down, let's say to $90 a share, I can then buy the shares back at $90 a share and return them to you. It would have cost me a total of $900, which means that my profit in the end would be $100 there. And so that is essentially the way shorting stocks work if it goes in your direction. But if it goes against you,
if it goes into reverse, I guess finish your thought. If it goes up $10 to where Apple, let's say, for example, is $110, then the contract in itself is going to also decline in value. That's where you lose the money.
Right. So it's still that's basically where you end up losing, right? So in this scenario, going back to what we were saying earlier, let's say Apple went up to 110. I would then have to buy 10 shares at $110, should be $1,100, and I would have to return those 10 shares to you, which means that I would have lost $100. Now, the dangerous part about that is that Apple stock, every stock has a bottom, right? Every stock ends at 0. Stocks cannot go negative. But there is no ceiling to how high a stock can actually go. So in this example, let's say I was to borrow 10 shares of Apple, collect that $1,000, at $100 a share. what if Apple went up to $300 a share, from 100 to 300, right? So I would have borrowed $1,000 worth of stock, and then I would have to purchase $3,000 in order to worth of Apple stock in order to return it to you. And so shorting it can be very dangerous because there's no limit to how much you can lose if the stock continues to run up and up and up. Just because you only put in $1,000 into the trade doesn't mean the most you can lose is $1,000.
What I find fascinating about all this, and you're getting into real diction of what's going on in the market. I think the internet in this particular example played such a role of the little guy beating the big guy, that I think actually just began. That the innovation of the internet just is now evolving where you're going to see, I guess, more of these type situations.
Yeah, it's access to information, right? Before, in order to do this, you would have had to think about it. Someone would have had to come up with the idea, put a group together, had like meetings with the group, talk about how you're going to, buy crazy amounts of Robinhood stock. And the way that these hedge funds got hurt in this situation, or everyone that was shorting GameStop got hurt in this situation, is they had to continually buy the shares back at higher and higher prices to return them to the people they borrowed them from, right? And so when that happens, when these hedge funds see the prices increasing rapidly, it creates what's called a short squeeze. And a short squeeze means that everyone who is short the stock rushes in at one time to get out as fast as they can.
I tell you what, name me something that everybody likes, a little short squeeze. You know what I'm saying?
So everyone likes a little bit of a short. Yeah, in that regard, I agree with that, man. Everyone likes a little bit of a short squeeze.
So when the stock started shooting up like that, and I mean, maybe I'm jumping ahead here, and then all of a sudden Robinhood had put regulations on buying these stocks. So GameStop, AMC, and I think there was 6 others.
Yeah.
Do you think, or do you know, is this to help the hedge funds or the billionaires, or was this just to control?
No, yeah. So the only way you're allowed to short a stock, you have to have what's called a margin account, right? A margin account means that if you end up suffering losses that are greater than your account value at a certain, or you basically want to borrow cash. At this point, you're borrowing cash from broker you're using, and you're using that cash to place trades. Now, in order to short a stock, the broker requires you to do that because there's no limit as for how much you can lose, right? So if you lose $50,000, you only have $10,000 in your account. They can't say, oh, we'll forget about the 40 grand and just give us your 10. No, they want they still want that 50 grand that's owed. So essentially you will end up owing the brokerage in that situation. Now, the way that came into play here is that when volatility goes up, when stocks are going up and down in a crazy race or a dash like they were the other day, the actual lenders and the brokerages and the regulatory firms and everything like that, they will come into play and say, hey, look, you need to tell your customers that they need to have a higher amount of cash on hand in order to trade these stocks on margin. And they also told Robinhood themselves, hey, look, you're going to have to build up a lot more cash in order to allow them to trade, because this just became a lot more risky, basically.
So Robinhood, you're saying didn't do anything illegal, or?
No. And the way they executed it,
because it seems the people think certainly they did.
Yeah, because if Robinhood did not put that into place, there's a strong chance that
that is still going to court.
Yeah, there's a strong chance the stock would have gone up considerably. and these hedge funds would have lost a little bit more, right? Or would have lost more money.
Well, yeah, because from what is on the news, or let's say Barstool, Dave Portnoy is a huge advocate against Vlad and Robinhood, saying that he put a hold on the ability to only sell these stocks instead of buying them. So of course they're naturally just gonna drop. Saying
so the reason they would allow you to sell and not buy is because when you sell, you would essentially be closing out the position into cash, right? When you're buying, then there's still the potential for outsized losses, especially if there's shorts on the trade as well. And so when you look at it, it's really a way that Robinhood, that's something they had to do, probably by regulatory standards, and something also to protect themselves in case the value of GameStop just crashed. That's also something they would have to do, because their own customers, right? Their own customers are probably betting on margin, meaning they're borrowing from Robinhood in order to buy shares of GameStop. So a lot of those customers too can have their accounts blown out if GameStop, really takes a massive dump, if it goes down quite a bit.
Also, I love Dave Portnoy, but you kind of have to watch who you listen to and get information.
100%.
I mean, he can sit there and complain about market manipulation, and granted, what I think he's stating and Robinhood was wrong, but he himself has major leverage in kind of,
he's starting a movement. Everyone on the internet is like, oh, Robinhood, I'm seeing how many posts am I seeing about Robinhood in the wrong here, and people trying to, press the issue.
Certainly is a part of it.
But it's this to me anyway. It's the same people who bought this GameStop and all they read the headlines and they really don't know exactly what's going on. So they're just kind of listening to Dave Portnoy, who has a huge voice.
Yeah, and that happens. Like there's other people in the industry, Chamath, there's Chamath Palihapitiya, and there's Elon Musk, and there's so there are all these people.
But Dave Portnoy doesn't tell you what to buy outside of his stock.
Out of what, Penn, you're saying?
Yes.
Yeah.
Yeah, he might not actually. When you're a part of a public company and in a high position,
he's not a part of it. He is there. There's regulations around it.
Yeah. He might not be able to say like you should buy this, you should do this.
No, but he's selling hats with like the ticker on them. I mean, so like he is.
Maybe it's a smart way around it. I'm not so sure about the laws surrounding that, but I think you're definitely right. These people have the ability to influence people using their money to essentially gamble, put their money towards something they have no idea about, and just hope that it goes in the right direction. Going back to the other point, I don't think Robinhood handled it very well. I don't know if they did anything illegal, but there probably was a better way to handle it than how they did, and just shutting it down intraday and saying you could only sell from this point.
Well, I don't think they were the only one either. I think it was like TD Ameritrade as well.
Yeah. And I believe they all did it for the same reason. They just, margin requirements went up for the stock, and so they had to raise cash. And just to curb a little bit of the volatility, because it was insane for those past few days. For sure.
So let me ask, did you get in on this?
Did I? No, I couldn't.
You didn't touch it.
I couldn't. You could see it going up, right? And in a short squeeze, typically short squeezes do have room to run. Like you could have seen that this was something that was going to happen. The problem is when what I consider myself as a fundamental investor, I'm someone who looks at the ground up of the company and try to make a decision whether I think they're going to succeed or not. And I just
what you're saying is you don't believe in GameStop.
Absolutely not.
Yeah.
Absolutely.
You're totally against this movement then, because it seems like a lot of people from my age, childhood, have felt nostalgia about GameStop and they're trying to save it or something like they can.
Yeah. But even then, right? Even then, if you're feeling nostalgia,
Tell you
about
what,
a
they're not
company,
savings, they're money. Believe in that, though.
it doesn't mean the company is worth $25 billion. I mean, think about it this way: the last time I walked into a GameStop, last time I walked in, it was probably a few years ago. I think I walked in looking for like an Xbox controller, and I walked out with an Xbox controller and like 4 video games that I might have spent $3 each on out of that used box that they have, right?
Went for the used box.
It's like how much? Well, yeah, that I like playing old games because I'm not really not too into the new. Like I'm not too up to date with all that stuff. But
last time I went to a GameStop, they didn't even have what I needed.
Exactly.
What'd you need?
I need a Nintendo Switch. No, the bastard.
Well, I mean, it's just a conversation here, but yeah, I mean, those things are popular.
Yeah, and so the point comes up, like, GameStop is not a company that makes very much money. It's just not worth that much money. What the stock was trading at is not worth that at all. And so when it came time to potentially partake in the trade, I, logically, emotionally, was I tempted to buy in? Yeah, but logically, I just couldn't.
Yeah.
I couldn't pull the trigger. I had a block there.
Yeah, because it's a straight gamble. Like, earlier today, I
got high and gambled.
I felt like gambling. So I gambled.
Yeah, and if you have some money to spare and you don't mind and you just want to have a little bit of fun,
I would advise to go play the Super Bowl. It just seems funner.
But if you would decide, what is the deciding factor here? Like, what is the pro? Like, all right, should I do this? What in your head is like, is this going to go up?
So I had a few. Why I bought that is the person I was talking with was on Reddit in live time where they were talking about how Robinhood allows you to now buy more than one share, in which everyone apparently in the Reddit community would now be buying a shit ton of shares, potentially increasing the price. Yeah, so that was my logic and theory on my gamble. I'm down about $150 since I made that decision.
So were you gonna pump it and dump it, or is this something you're trying to wait and hold off? Now I guess you're holding.
I mean, Ankit here can answer that question, but like when you pump and dump, I'm assuming even if that's a month-long span, that's a pump and dump, right? You're not keeping it long term.
Yeah. So first thing is pump and dump is technically illegal, right? Like it's technically illegal where a group of people comes in and the buying pressure is so heavy and they try to get everyone else to buy, and then you sell and you let everyone else hold the bag as the stock is going down.
So, well, that's what's scary about buying now is you could be I'm the guy holding the bag. I'm trying to get these bags, I'm trying to get these monies on kit. I'm trying to make money Mondays, practical Monday.
Well, Ankit's our stock guy.
I probably wouldn't put your money. I wouldn't put my money in GameStop at least.
I would have said, why did he not take your advice? I would question why he didn't take your advice. You are the stock guy.
No. I mean, if you want to have, a little bit of fun, if you have some extra cash, I'll never put it. I'll never put it beyond someone to make their own decision on a trade because they could be right. They could beat out my trades 10 times over, and they could be a better stock picker than I am. But from the way I look at it is, there's no way I would touch GameStop or AMC. Like, it doesn't make any sense.
Two companies that are just
movie theaters are closed.
Yeah.
Movie theaters are closed. How can a company increase in value so dramatically when they're not even in business right now in the majority of the world or in the majority of the United States?
I guess that's the power of the internet, apparently.
Yeah, it's the power of kind of like financial engineering and I would say some tactics with short selling, but I think the biggest picture is that, or looking at the big picture here, if you have a lot of money that you have made in these stocks, for anyone that's listening, I would urge you to at least take something off the table. You don't want to be the person that's stuck holding the bag because these companies are not worth what they're trading at today.
So eventually it's just going to plummet.
and they will go down. The question is, when is that going to happen?
Wouldn't the other question be, is betting that it goes down?
You could, right? You could do what we were talking about earlier, which is shorting. But when you short, there's that no limit to the upside. So the problem is in the short term, let's say in the next 2 weeks, if the stock makes another massive run up, you could have what's called a margin call, which is where the broker or the bank will literally call you and they'll send you a message saying you need to deposit X amount of dollars.
You don't want that call.
Yeah, X amount of dollars into the account in the next 2 days, or we're going to sell your stock in the portfolio to cover your losses right now. And so they can technically go into your portfolio. Let's say you own Apple, Amazon, stocks that you want to hold for the long term. They can sell of that.
They could sell other stocks.
Your positions, yeah.
Wow.
So like if you hold positions in other companies, they can go in and sell those
and
to cover the loss.
Putting you in foreclosure.
In a way, yeah. And so margin call is something that you do not want to get in, into. You just don't want to get into that position. And there are other ways to do that, which is like, to play the other side of the trade, which is called buying a put. That's in the options market. But they're just, I looked at them on Friday. They're just too expensive. The volatility is causing them to be way too expensive.
I was talking to someone yesterday, and he was saying he put X amount of dollars in his in Dogecoin. Right, this is the next thing that is a frenzy across social media. So I was trying to do the math with him and explaining, I guess, risk. And I look at it as, when you make a bet like that, it's not how much money you put in, but how much of your net worth are you putting in, right? Mm-hmm. So when I did the math, I'm like, so you're betting 7% of your entire worth on this thing that you essentially know nothing about. And then when you put it in that perspective, I mean, it makes, I guess, a novice investor kind of a bit more.
It'll make anyone take a step back, right? I think it would make anyone just think a little bit more as for what they're doing, if you evaluate it in that sense, for sure.
Well, I don't that is a meme, but that was like a meme. So does this ever have a chance of blowing up?
So Doge, you're talking about Dogecoin?
Yes.
So yeah, as a crypto investor, and my brother would probably be a lot better suited to answer these questions, but
maybe we have to have him on.
Yeah, you should. He's smart guy. But as someone who is in the crypto markets to a certain extent, I keep about like 10 to 15% of my net worth typically in cryptocurrencies. So I do believe in them, but there has to be a use case. There has to be a purpose behind the coin. And so Ethereum, Bitcoin, even, if you wanted to go into USDT or USDC and Ripple, let's say, these coins have a purpose, at least. Whether or not they're successful, they have a purpose. Mm-hmm. Dogecoin, I haven't looked into it enough. I knew it was a joke years ago when I was looking at it, but I think just something that doesn't.
We were joking about it the day before it was like a thing.
Yeah, and it's like, something that has no purpose going up in value a couple hundred percentage points. It doesn't really make any sense. And what it implies to me is that it kind of, the way this market is playing, it is a little bit of pump and dump. Like, there are players in the background looking to make quick bucks, and hey, they are making money. But when this ends, there's going to be someone holding the bag that's going to lose a lot of money. And I don't think it's going to be professional investors. I think it's going to be small, retail guys. Yeah, Chris.
Yeah, I mean, this is the first week I have ever seen so many posts about the stock market. So it led me to believe these people just got Robinhoods for the first time to get into these accounts.
Yeah, and that's a great thing, right? That's a great thing. Like, access to investing. You think about what it'll do for people like us who've been in the market for some time. That's fresh money just coming into the market. That should bring up prices. That should help the economy. It should do a lot of that. The problem is, like, I think there's a certain level of education behind knowing what you're doing when you are, as an example, shorting or buying a GameStop, a company that's extremely overvalued, there should be some sort of education around that, in my opinion. Something to just say like, hey, we just want to make sure you know what you're doing before you place this trade, because there's a potential of risk of you losing money as well.
I saw a Facebook post earlier of someone who was really an early investor in GameStop. He was in the Reddit community. The dude know his stuff. He was in it, made a ton of money. But it was funny because someone said how he's going to have to pay tax on that when he sells it. And he was kind of like arguing this, saying how he's still going to continue to use the money to buy other positions. But I think he's actually incorrect. Am I wrong here? Where, I mean, just because he could only buy the same position in which he sells. Otherwise, you are now obligated to pay tax on that.
Taking a profit.
Yeah. So if the moment you take a profit, regardless of whether it's the same stock you're buying later down the line, which would be called if you buy it again within 30 days, it's called what's called a wash sale.
Yeah, which
basically the IRS.
So you're not going to pay the tax on it.
Well, in the opposite scenario, it's like any losses that you may really what the wash sale rule is. It's designed to prevent people from selling a stock today at a loss and buying it back tomorrow in order to just report that they had a loss on that stock. So basically, it's just a way to prevent tax evasion. In this scenario, where
I do that.
Yeah, they won't let you. They won't let you.
You do tax evasion?
No, but like I purposely sell shit at losses. I don't try and cash out because I don't want to deal with
because
paying
of
Yeah,
tax.
which is fine. But if you buy it back within 30 days, then the IRS will not consider that a loss. They don't consider that loss.
Yeah, but like I do that sometimes with Facebook. If it's at 250, let's say I sell it and then it goes down 200. I'm trying to buy it again.
I wish it went down to 200 again. I'd buy a bunch.
Yeah, which again you can totally do that. But if you're taking a loss, they won't let you claim that as a loss until you haven't traded that stock for 30 days, basically.
And no matter yeah, you continue. Sorry.
I was saying what this guy was doing on Reddit. He can, when you take profits in your stock portfolio, although you technically have a tax liability on paper, you don't actually pay out taxes until the next year, right? So he is trading with pre-tax money, which is a smart thing to do, especially if he can incur like he can take big risks, right? Because at this point he's probably made so much money that if that $10 million or $5 million turns into 30 million, that's even better. He's fine paying the taxes on that. But if it goes down, then he'll be able to write that off against his gains as well.
Okay, so, a young, wise, intellectual man such as yourself makes a trade and makes 10 mil off it. What do you do?
Oh man. I'd be drafting my resignation from my job right now.
No more 9 to 5.
I'll be sure to cut this segment and make sure I air that when the bosses people.
No. I think if you hit a windfall like that, you make $10 million. For me, I would probably first take a vacation, 3, 4, 5 months off.
Oh, donate it to build the empire.
Yeah, build the empire. Chill out a little bit.
Love it.
And probably travel the world. And then after that, I'd probably put like 5-6 million of that into, and this is disregarding taxes. Let's say you netted 10 million at the end. Probably put 5-6 million into like income producing investments, something that just pays you income every month.
Dividend, so safe, security.
Yeah, relatively safe. There's a saying that you only need to get rich once, right? If you get rich once, you never should need, if you play it right, you never should need to get rich again. You can prevent yourself from losing that money. And so once you're rich, there's no point in taking massive gambles to make a ton of money. If you're making 3-4% a year on $6 million, you'll be fine.
Well, that's why, it's fascinating, right? Because for the audience who are listening to this show, I don't know what characteristic or trait that we all possess, but most likely they and us know how to manage money. And that's why you see lottery winners, they don't have the ability to manage money. In fact, they have the problem of not being able to save it and manage it and multiply it, which is why a lot of them go broke again.
Yeah, I mean that's just shocking, man. First thing you do, I think if you hit a big lottery or a big windfall, even in the stock market, go see an accountant, go see a lawyer, and talk to them about the best ways for you to protect that money and how to invest it moving forward and stuff like that. Because that's a different level of money. A few $100 million, you wouldn't want to put that into the stock market. There are safer, easier ways where you can live, generations and generations without ever worrying about it.
Ankit, we all want to hit the lottery and we love lotteries. Why don't you give us some lottery picks here for our audiences here? You came on the show last month, spoke about Uber. Uber goes up 5% the next day. You're texting me acting like you're the man over here. Like, hey, look what I did.
Sure.
So why don't you give us some of those?
Yeah, absolutely. This is actually a big week. So this actually happens to be an earnings week for a lot of massive stocks. And the ones that I think you would still be, even if you wanted to buy a little bit ahead of earnings, see how it goes and then buy after, those are some stocks I would highlight. So within that, you have the usual suspects. I believe Amazon is reporting this week. I think tomorrow. You have UPS, which I do like long-term as well. You have Google also. But
you like UPS, like the United Postal Service?
Yeah, UPS. It's not
I bet
United
you
States
like that,
Postal
but
Service.
I personally hate it because I've written some letters that didn't get where they needed to go.
Well, if you
That's
put the
USPS.
wrong
That's
stampage on.
USPS.
All right, that happened once.
And
Actually, I don't know if that could happen twice. You know what? Proceed.
No, I was going to say the one that I am interested in that's not in that usual suspects of, Amazon and Google and PayPal, I think reports on Wednesday. Look at Chipotle. Chipotle is an interesting one. I've owned it for a little bit. And they've been doing, the CEO over there, Brian Nichol, he's the old CEO of Taco Bell. And he was able to pull Taco Bell towards being a more digital company. And he's been doing the same thing with Chipotle for some time. So I have a lot of faith in him. I think Chipotle is going to do great. I think they're probably cutting costs with stores not being as open as long and stuff like that. So I think they'll have a good quarter, one that's worth looking at.
So right now it's Amazon, UPS, Google, and Chipotle.
Yeah, I would probably, UPS, maybe take a breather on that because if you own Amazon,
take a breather. Hopefully,
there was a reason why I didn't talk. There was a reason why I didn't talk for a minute.
Hopefully they're still listening.
So the whole thing is if you own Amazon, right? Amazon in a way has its own shipping service with Prime. Like they literally deliver their own products on their own. So if you own Amazon, just realize that you also have exposure. Yeah, you already have exposure to that market. So you're probably better off just
I tell you, when I don't really go to parades. I don't like parades. I don't see parades being fun.
It may not happen again.
What?
Groups like that, who knows they're happening again. You'll be watching parades from
definitely
TV.
Definitely will. But my point is that seeing an Amazon truck makes me feel so much oh man. An Amazon truck is like a parade for me right now because I know they're out there making me monies. I cheer them on. Funny. I'm like, yeah, woohoo!
Yeah, it's a great feeling, right? And that's why, like, part of the reason why invest in what you know, man. Invest in the companies you know, you love. You're going to be in on that market. You're going to know what's going on, and you could cheer them on every time you see someone buying a Roku TV. I celebrate to myself a little bit.
You could cheer on UPS now too, trucks apparently, because you get a little taste of that in Amazon.
Oh no, not UPS. You won't get a taste in UPS, but the overall shipping market and deliveries market is good.
What was that, Frank? You were saying the taste of UPS?
Yeah. You're saying you could cheer them on as well.
Well,
sure.
Plenty of UPS trucks out there.
I'm not a fan of UPS. UPS, no, not my thing. FedEx.
It sounds like you lost a package or two.
Oh, man, Ankit, the clock is winding down. It's an absolute pleasure always picking your brain and gaining your knowledge and of course teaching our audience ways to make money and most importantly manage money, but giving them a new perspective to think outside the box.
Thank you. Hey, well, I appreciate you guys having me on the show. Check out nitneyfinance.com when you get the chance.
Well, Ankit, wait a second. If we're going to plug that in, I would have plugged that in first thing in the show. But, I mean, do we have an updated blog here?
No post yet, but it's coming this week.
It's at the end.
We're promoting the same exact thing that we did last month.
The 10 point.
I tell you what, I have had more people ask me for how to get into the stock market in the past week than I've had in a few months. So that article came into play. If you're interested in getting into the market, go take a look. It'll be worth your time.
Well,
Ankit, go ahead, Frank G. Go ahead. Send it out. I'm out.
This is the 100th episode, so that is something to be.
Oh shit! Forgot about that.
100th episode.
1 century. Damn it, Ankit. Maybe we shouldn't have had you on.
And I just want to say we have a wonderful fan or listener, Alex, who sent me a bottle of Ciroc right here. He said, "Congrats on 100 podcasts. You guys are a real inspiration and are so driven. Looking forward to celebrating once we all make our first million real soon."
Huh. I love it. Sounds like that guy got into GameStop buying you guys bottles of
Ciroc. No, he's a good man, and
it looks like he's opening that bottle.
I gotta swig from this because my boy bought this.
Well, hold on.
You better hurry up. Cheers, the big bottle here.
Oh man, teamwork makes the dream work, huh?
Hey, Alex, we appreciate you, Ankit. We appreciate you, Frank G. We appreciate you.
We appreciate you all, baby.
Salute.
Peace.